All right, good evening, good morning. I almost said good evening. I feel like good evening. I'm back from down in Texas. Welcome to the trade findings and adjustments for March 21st, Thursday at 10 a.m. Mountain Standard Time. I really like what Keeve did a couple days ago. So please feel free to go back to my Hurley investment and you can catch some of these as they've been posted online. Keeve did a good one. I must apologize for Tuesday night. Being out and about, I didn't release the update for people to catch Tuesday nights. I only had a couple that called me directly that we had in. So please go watch Tuesdays when that's posted. These do have to get approved by the Securities and Exchange Commission. So let me just go over Tuesdays and Keeves in general today. When we look at what's most important when trading in the stock market, it's our belief that you have to manage risk. A lot of people have asked me, well, Kevin, since you're doing so good spread trading right now, why don't you just spread trade everything? And I tell them I do. I do spread trade everything. I just do the majority of it in a collar trade because that allows me to be wrong. It allows me to be wrong and not book huge losses. When people always ask me what's most important in doing what I do, it's learning how to manage risk and what the potential risks are in the current market. And I've got our chart up of the S&P right there. And I just blew right by it. Let me get this moved over a little bit. So if I was to show you the chart of the S&P, what are some of the risks you guys see? These are technical risks, right? There we go. A couple answers came in and both are correct. I want to put that in. Overbought. Overbought. Easy to see, clear as day. Overbought. Which typically means when we hit that overbought line, do markets continue to go higher? Do they pull lower? There you go. They go lower, of course. But what's a little different this time? There you go. Yeah. We have a China deal. Now, the China deal we want and the China deal we're going to get will be vastly different. It'll just be vastly different. There hasn't been enough time to work out all the nuances. In fact, it's the reason why President Trump said, hey, we're also going to keep tariffs in line for a while here to make sure things get done. Kind of wrecked our market yesterday a bit, but that's to be expected. What else are we not counting on that could make this different? And if you're not sure, you don't know, go ahead and just put a question mark in. A couple question marks came in. So, what if I told you you don't fight the There we go, the Fed, right. We have a very accommodating Fed that took 2 rate hikes off the table with 9 months, still to go this year. We could have a rip-roaring economy. But we have a new, rather inexperienced Fed that, for all intents and purposes, boxed themselves into a corner yesterday and took both rate hikes off the table, which spurred some upward movement in our stock market. Does that mean we're not going to have some pullbacks? Probably. If I was looking at the S&P, I would be noting more towards the end of the year. We could get our golden cross. We technically have a crossover on the MACD, but institutions are overbought, putting too much money into the stock market. There are just as many reasons to go up as there are to go down. And what I don't like is that our base is not really being built sideways. Our base or our support is down at the 200-day simple moving average right now, which means in today's stock market, you got to be picky. In today's market, you really have to be picky on the stocks you want to be in. In today's stock market, you have to be picky. I'm going to put that in quotes. As to the positions you should be in. Winners. Apple. Micron's winning this year. Nvidia's winning this year. Oh, what's the other one that I'm missing? Disney has won this year. Under Armour has been winning this year. Boeing is winning now. Meaning from the lows, there's an opportunity. In general, losers are banks and financials, but Visa's done extremely well this year. I would call it a winner, but it really hasn't moved yet like it had to. I'm a fan of Baidu. I've seen it fall from 288. 288 all the way down to 160s, 153. Definitely, I would expect to bounce up to the 200s very quickly as soon as we have some kind of deal. As soon as we have some kind of deal, we're good. But these are speculation. And one of the interesting points that's brought out, the reason why I don't just spread trade multi-million-dollar portfolios is because spread trading, outguessing the market, short-term trades is 100% speculation. And people don't pay me to speculate. People pay me over a period of time to be watching their portfolios, to be adding shares, to making up some of the downside movement. And so I don't trade all these portfolios with speculation. You know, this year I traded a $27,500 portfolio that I just had to take $4,000 out for a quarterly tax payment. And it's my speculative account. My longer term, my Schwab longer term one, 80-90% collar trades. People ask me, Kevin, well, you keep doing the same thing. You and Keith keep talking about bull calls and long calls. And it's pretty good because, yes, we've been in a bullish market since December. So I'm going to keep doing some of the trades that work the best. Last year, we were in a Visa Leap long call that we were in for over a year. We took our profits. We got back in. There are more Leap long calls spread amongst people's accounts. We were in a Boeing bull call. We took our profit. And by doing so, we're protecting the integrity of the account. What looks good today? A Leap Boeing 400 long call. If I was looking at some opportunities, I would definitely look to I would think you have an opportunity in Boeing and the next couple days, probably closer to 371, to run out in time. And there are a couple ways you can look at it. I'd be looking at a January 21. And I'd be at a $400 for about $44.50 is probably where I'd put my limit in. For $4,550, you could own 100 shares or the rights to 100 shares of Boeing to do nothing more than when we have one of these retracements, we can do a race up to 440. It is probably a 3 to 6 month out in time process. But one contract, $4,450, you can let it sit. Well, what if Boeing comes down and tests the 356 range, the 200-day simple moving average? Awesome. Have some cash on hand, a dollar cost average to get you a second contract. You might be in for about $8,000 to cover or to care for 2,000 shares of Boeing, which in all honesty would cost about $70,000. And you have about till January 2021 for Boeing to fill this gap. in an earnings report or two, they'll be back. They've still got 8 years of backlogs of revenue coming in. They make the fix, the planes are lifted, you'll see a bump or a rush into Boeing. I would be giving myself literally a 1 year, a 1 year, a 1 year and 10-month period of time to be right that Boeing's going to come back. It's simple. I look at Apple today. We talked about Apple a couple weeks ago. Way overbought. Now clearing its 200-day simple moving average. And someone asked me like 2 days ago, hey, is today the time to get into Apple? And I said, no, it was a couple weeks ago when I mentioned Apple. Today is when you start getting out of Apple. Today, at the end of the day, is a day that you start putting on some long puts. Kevin, why would you do that? And he kind of got me on his own question, right? Why would you put a bearish position on a bullish moving stock? And it comes down to the simple comment that, with one of those with all due respect things, right? With all due respect, Apple historically sells on the news. So if Apple historically sells on the news, if Apple historically will have its conference on the 25th, next Tuesday, I believe, what is it going to say that's going to move Apple higher than it already is? Would you want to take the risk and bet on it? Or would you rather protect yourself for that downside, most likely potential run from where it's at, probably back down to at least the 200-day? We most likely will have that $5 to $6 drop down. So yes, I am going to add protection for an event. It is not a earnings event. But I would tell you, you're probably going to be better off trading Apple in a 200, 205 bear put strategy than you will going bullish on Apple right now. And again, Apple doesn't stay overbought for long at all. Apple historically will have these news events and tank afterwards because it just doesn't have the oomph that it used to. People asked me yesterday about NVIDIA. The NVIDIA trade, for all intents and purposes, is done short term. It's at 181. You've got $1928 to the upside. And at 1981, you've got $27 to the downside. You can't find me a better stock right now that has a 50-50 chance of going up or down? Is it tradable? Of course it is. Another leap long call on NVIDIA right now. Only do one. Go out to 200. Change this one to NVIDIA. January 21. Out of the money because it's going to move into the money over time. $32.72. Well, Kevin, I want to own 3 or 4. Awesome. Own 3 or 4. But leg into it. If you want to do 4 out of the gates, put 2 in right now. And be willing to dollar cost average. And really go to 4, most likely at their next earnings. This is where you're looking to be picky. Kevin, I want to play the China deal. Me too. Here's a stock that's been punished beyond belief. $200, a nice round number. For $20.85. You have a year and 10 months for a China deal to get done, for a stock that's better multiple on growth than Facebook, but has a valuation that's pretty rich unless you look at its revenues that come in. Kind of a no-brainer. What I'm trying to push is when I'm looking here out in time and we have the uncertainty of the market, I want 2 things. I want a lot of time for things to go wrong and come back. And I don't want to use all my powder. I don't want to spend all my money out of the gate to not have the money to dollar cost average or give myself the time for things to come back in case I'm wrong. This is speculating. This is spread trading. This is why I don't throw $100,000 or $1 million portfolios into it. Are there any questions? What if you don't have enough money to do some of these leaps? If you don't have enough money to do some of these leaps, you should not be trading. You should be taking a profit. Take a profit, control some cash, and look to buy on the dip. Margin's not bad. Margin's not a bad thing to be in. But too much margin kills your portfolio. If you're telling me you don't have the cash for a $2,080 or a $4,500 investment, take a profit somewhere. Create the cash. It's okay to book a profit. But our markets are at a pivot point. And technically, they show that they should be going down. Low tides sink all ships. Take a profit. Take a profit, create some cash for a dip to make some money. It's a no-brainer. And I know you're going to come back and tell me, but what if? But what if it keeps going higher? Well, then you took a profit to free up some cash to go into something else that should keep going higher. You hear people talk about not being married to your stock. Spread trading is a speculative sport. You're looking for the next best thing. You're not looking for something to go spend your rest of your life with if you're spread trading. It expires. Collar trading can be like marriage. Spread trading is like dating. Find out if you like it. If you like it, have a couple good dates. Doesn't mean you have to get married in a month. Kind of a weird analogy to be using the more I think about it. So I don't mean to have that come across as harsh. That's not my intention. But if you don't have enough money to be spread trading, you probably shouldn't be looking at any new trades. You should be looking at creating some money, making a profit. Are there any other questions? I showed you 3 opportunities today. I think those are some pretty good opportunities. And I definitely think you should take a peek at them for some longer term, knowing it gives you quite a while for things to come back. And you should be in good shape. All right, with that said, I appreciate you being here. Maud, I'm going to be trying to give you a call tonight, or you're welcome to call me. Maud, I'm going to text you right now a quick cell phone number. Nice to see you here. Hopefully you have a day off. So there's my cell phone number at you. And 8 p.m. your time should be 6 p.m.-ish my time. So why don't, when you get home, you've had a chance to get unwound a little bit, dump your stuff on the kitchen table or what have you, go ahead and give me a quick buzz. Guys, have a wonderful day. Glad to be back. Glad to be with you. What do you guys think of Kiev? Was Kiev helpful? Was he interesting sometimes to hear from someone else? He's not me. That's correct. But it's good sometimes to hear different people. It's good sometimes to see a little different perspective. Kiev has a very unique way of looking at his option spreads that I am quite impressed with, is what I'm going to tell you. All right, appreciate being here with me this morning. Look forward to seeing you here next Monday evening for the market view, and you guys have a wonderful day. Bye-bye.